Bitcoin. Yo, it's been pretty crazy recently. As you've probably noticed, if you've been watching the charts, the crypto markets have taken an absolute battering in the last few days. We saw a big sell-off happen for all crypto assets. Bitcoin, Ethereum down pretty dramatically. Altcoins. Oh, our altcoin bags. Will the pain ever end? At some point. But hey, you know, when is the question, of course. Now let's take a look at these charts here to start off with. So this is the Bitcoin dollar chart on the weekly. I want to walk you through this chart. So that sell-off that we had last week brought the price down from around $29,500 at the peak of the sell-off to around $25,200, bouncing back up slightly, although we have not seen a very convincing bounce as of yet. Still a lot of fear in the market. Still a lot of people thinking that, well, the worst could still be ahead for us. And of course, $20,000 is the next major range of price interest. Not a lot of stickiness between us now, of course, except for that $25,000 level and $20,000. So let's hope that we hold above 25K. But there's lots of fear right now in risk markets more broadly. Bond markets are breaking. What's going on in China? All this kind of stuff weighing heavily on the markets, which is starting to be reflected, of course, in the charts. Bitcoin has closed the weekly candle under the 200-week moving average. Now, the 200-week moving average, we talk about this a lot. I hope we don't have to talk about it very much anymore, but here we are talking about it again. This is the bull bear line in a major way for the cryptocurrency markets. 200-day as well, we talk about quite a bit, but 200-week, very, very relevant, of course. Here we are once again closing a weekly candle under that. Now, we closed a weekly candle under the 200-week simple moving average back at the start of June. In fact, we had two candles close completely under the 200-day or 200-week SMA at that point. Then we bounced. Of course, on the BlackRock news. Completely news-driven rally for the cryptocurrency markets, and BlackRock's not going away. BlackRock's still trying to get a Bitcoin ETF. Don't forget about that. But we did have a bounce back then. However, before that, we spent a very long time from 13 June 2022, except for a little tiny peak above in August 2022, all the way up until March 2023. We basically were trading under the 200-week simple moving average. Pretty crazy stuff. Generally, we would consider that buys under that line will historically be proven to be good buys. Not financial advice, of course, but just letting you know what traditionally has been the case for the markets. We did bounce a little bit of hopium here in the charts. We did at least bounce off of the 200-week exponential moving average. So that 200-week EMA right now is sitting around $25,500. So that's a little bit of something to hope on right now. Trying to find something out here to give us a little bit of hope in the markets currently. Very interesting, though, to see it bouncing at that key level. Right now we do have this major confluence where we have the 200-week exponential moving average lining up with a key area of price support at $25,000. It is worth remembering as well that that $25,000 line is incredibly important. If we look back here, we can see that it was a major area of price importance right back throughout this entire market move. So, of course, we saw it act as support back in May 2022. We saw it approximately act as resistance in August 2022. We saw it acting resistance again in February 23. We saw it acting as support in June 23. Acting as support again currently. How long that holds for will depend, I think, a lot on the macro situation that's playing out right now. I want to share this one with you from the rational route as well. It gives you a bit of, I think, much needed perspective on what's actually going on in the markets. So this chart shows basically the Bitcoin halvings over the year. Of course, we're now coming up to the fourth Bitcoin halving, April next year. It's not that far away, guys. Big perspective here. But we've seen all these market cycles come and go. Bitcoin from trading at cents to $69,000 back down to where we currently are price-wise. Bitcoin crashed, guys. It's just a blip on the radar when you zoom out and look at the historical lens. And of course, in 3, 4, 5 years' time, we'll be looking back at this, the great crash of August 2023. It'll be nothing more than a tiny little blip on the radar, realistically, even if the price goes down further. This is all normal stuff. Long-term thinking here, guys. Long-term thinking. Also, this I found was a very interesting chart. Looking at the RSI. So this is shared by Matt C over here on Twitter. He said that the strength of this 24-hour Bitcoin sell-off now rivals the 2020 crash. That's in terms of the RSI on the daily. It's crazy stuff. This move, it's a pretty small move. Realistically, went from 20, let's say 30 down to $25,000. Let's just round up here. We went from $30,000 down to $25,000. Not that grand of a move. Remember back in 2020 in the COVID crash when the RSI got as oversold as it is on this crash, the price went from, wow, it was like $6,000 or $7,000, $8,000 down to $3,000 or $4,000. It was brutal. It was quick. It was shocking craziness. Yikes. And yet the RSI here, pretty similar level, which I think is noteworthy. It really shows how powerful that move was. And yet, in spite of the power of the move, we're still trading around $26,000. Not all bad. If we had had a comparatively big move RSI-wise compared to the 2020 COVID crash, we would have seen Bitcoin go down to like $15,000 or something like that. Just food for thought here, right? Also wanted to share this chart with you from El Crypto Prof, the mustache over here. He said BTC marks the lowest RSI in over 20 months on the daily chart. At the same time, hits the support line that was resistance for almost a year. We were just talking about that very key support line here. Each time the RSI has been under 30, the price of Bitcoin has risen between 28 to 60% afterwards. No reason to be bearish. And that's a very true point about being oversold. Oversold readings tend to be overreactions by the market. And when the market overreacts, we tend to have a reaction in the opposite direction. Now, it doesn't always happen, and RSI readings, of course, can always go lower. Or we can have a slightly higher RSI reading and a lower price. We can also have a divergence like that. So that's worth keeping in mind. However, historically, these kinds of strong oversold readings on Bitcoin have been buy signals. Whether you like to hear it or not, that's historically what has happened. By the way, before we get into the next charts, if you're looking for a place to buy or trade Bitcoin or Ethereum or other top cryptocurrencies, you got yourself an account over on BYBIT. It's the best place to do it. They got great futures markets, exceptional spot altcoin markets, very popular copy trading services. And as an exclusive bonus, when you use the link down below in the description, you'll get up to $30,000 in trading and deposit bonuses, as well as exclusive trading fee discounts. So check it out if you are a trader. Now I want to talk about the money supply. This is an interesting one that was posted by TechDev52. He said, either the months ahead surprise the market yet again, or this time is truly different. So this is looking at basically money flows versus the price of Bitcoin. And so we can see when we have money flowing in from China, for example, it tends to correlate very strongly. The money flows in the market tend to correlate very strongly with the price moves for Bitcoin. And that's what we've been seeing recently. Here's another chart which shows that same information, basically, or quite similar information. So this is Bitcoin. And this is the flow of money. This is the dollar, the euro, the yuan, the yen, the British pound, the most important and impactful global forex. We can see quite clearly when we have an expansion of the money supply, we have an expansion of the price of Bitcoin. In fact, we have an expansion of risk assets more broadly. When we have a decrease in that, we have a decrease in the price of Bitcoin and usually, of course, a decrease in risk asset prices. Although, of course, we've seen big rallies in AI stocks and tech stocks and EV stocks and stuff like this year. Still, the price of Bitcoin has been correlating quite strongly with the money supply, which I think is super, super interesting because the money supply could be about to go up again. This shared from bar chart, $1 trillion rescue package may be needed to save the Chinese real estate market, warns the Clock Tower Group. Interesting. See, China's already been printing. China has already been printing. In fact, China let us out of the money liquidity bottom back in November, late October, early November. China started injecting money into the economy again. As we covered last week, China's economy has been sputtering a little bit, not hitting targets, still doing okay, not hitting the grandiose targets that they had set or which were expected, thus putting more pressure and fear and doubt onto China. Evergrande collapsed. Obviously, that rattled markets last week. Part of the Bitcoin sell-off could be attributed to that, plus liquidations across major derivatives exchanges. But if China needs to print $1 trillion to bail out the real estate market, $1 trillion, it's a lot of money. It's a lot of cheddar, man. It's a lot of cheddar. It's a lot more than China's printed so far during this crisis. That China's been trying to restart its economy, spark the economic engine up once again. Because you have to remember that aside from the mega developers like Evergrande and stuff like that, a lot of Chinese personal wealth is tied up in investment properties. This would essentially be Chinese government needing to bail out Main Street, Beijing, I guess, because all these people are standing to lose a lot of money, and that could cause a lot of economic pain. That has a lot of knock-on effects, and it may be easier to turn the printers on compared to let all that pain transpire. So we'll see what happens. Of course, this is just the opinion of the Clock Tower Group, but China is facing a serious problem when it comes to this. What are they going to do about the real estate market? We've been covering the Chinese real estate market and all the different angles of it, from small bank funding and all the other stuff. There's some problems. There's some structural problems, and the Chinese government may need to step in to bail out the regular Chinese person. And if that happens, if $1 trillion in Chinese liquidity enters into markets, watch out, man. Watch out. And of course, one thing to keep in mind in this sell-off that we've seen recently is what's actually happening on chain. And I think the most important chart, and it's a chart that I've shared with you dozens of times before, I think it's just that damn important, is that in a way, this time truly is different. This is the era of dwindling Bitcoin supply and increasing Bitcoin scarcity. The supply of Bitcoin on exchanges has only been going down since the COVID crash. That was the peak. COVID crash was the peak. Last panic sellers got out. Ever since that time, the amount of Bitcoin on exchanges has been slowly and steadily going down. Moving into the fourth Bitcoin halving, when we're going to get even more scarcity, when miners go from 900 to 450 Bitcoin a day, it's going to make it even harder to put that sell pressure on the market by miners. And of course, that all is on the backdrop of a coming Bitcoin ETF. When, not if. Those are the words of Mike Novogratz, reporting from insiders that he knows at BlackRock and other major financial organizations. Are they right? Is it PSYOPs? Is he PSYOPing us? Are they PSYOPing the PSYOPer? It's hard to say. But likely a Bitcoin ETF will come. The biggest wild card of the Bitcoin ETF equation, I think something that not enough people are talking about, will be what happens if Grayscale gets a Bitcoin ETF as well, because they have 680,000 Bitcoin. And if they are allowed to list a Bitcoin ETF and are allowed to open up redemptions, how many people are going to sell their Bitcoin, redeem their Bitcoin? There are people that sit on that are big time in profit. A lot of things can change in a couple of years since they locked it up in GBTC. Not saying they're going to sell, and maybe nobody sells. Somebody will sell. That's a bit of a wild card in the Bitcoin ETF equation. Will there be enough incoming demand to meet that potential sell side pressure? Likely, but you have to account for chaos. So that's something to keep in mind. Remember, it's estimated that BlackRock Bitcoin ETF approval could bring 20 to 30 billion into the market. It's a lot of money. That way outweighs what Grayscale has. So there's that to keep in mind. It's a lot of money. A lot of money coming to the market. And that will buy up a huge part of the supply sitting on exchanges right now. So it's all worth considering. But that backdrop of where we are right now with all these fundamental things happening, yeah, there's been a price sell-off, and it's really not that dramatic. I think it feels more dramatic because we're in this market situation we've been in for such a long time. Anytime there's a 10% or 15% sell-off, we go, oh, it's the end of everything. We're going back to zero, baby. But if we were in a bull market, a stronger bull market, and we had a 10, 15% sell-off, everybody, whatever, buy the dip, who cares? Not a big deal. It just hits differently when the markets feel like this.